Okay, so tell me in the comment box, is there an industry left where Adanis are not there? I'm having a hard time thinking about it and my voice is trembling as I'm stating these statements. This stock was trading at roughly 50 paisa in 2005. In the next 4 years, by 2009, it started trading at roughly 1.5 rupees. So there was 3x gain in a matter of 4 years. Then let's continue the story. Let's look at what happens in the next 4 years. So from 1.5 rupees by 2013, it went to approximately 5.5 rupees. So again, almost 4x gain in a matter of 4 years. Let's continue the story further. So from 6 rupees in 2012, in 2016, it went to 28 rupees. So 4x gain in another 4 years. Let's continue the story further. So from 28 rupees all the way, it went by 2021 to another 5x, 6x gain. So if you study the pricing chart of this stock carefully, you will say that, you know what, I'm going to sell my house and invest all my money in this stock because this stock at least doubles every 4 years. So which stock am I talking about? I will do an industry analysis, I will do a stock analysis, and I will answer the question whether or not you should be buying this stock and whether or not it will be doubling in the next 4 years from where it currently stands at roughly 650 rupees. So that is the precise discussion that we are going to have. Also, for curious souls who are interested in knowing which other stocks are doubling almost 2x every 4 years. Here are 3 more stocks that are doubling every 4 years. These are not the only ones. I will create and update this list further. But let me know that from these 3 stocks, which is the next stock you would want me to analyze. So whichever stock gets the most comment, I'm going to release that video next. Also, please press the like button. We will get the video started. In order to prepare this video, I had to undertake a lot of research. I had to study a lot of things. In case you are interested in research and amping up your knowledge in research-oriented fields, then you can definitely check the program by Upgrad. It is called as DBA or Doctorate in Business Administration. There is more information linked in the comment box, so you can go and check it out. So which company am I speaking about? I am speaking about Borocells Renewables Limited. It is an 8,800 crore company. It is not a huge company in terms of market cap compared to some of the other giants. So what does the company do? It manufactures something called as flat glass. In fact, it only has one product which is called as flat glass, and 100% of its revenue comes from flat glass business. Now, what precisely is flat glass? Let me just help you understand the context a little bit more. So you might have seen energy efficient buildings. So they have these special panels, special glasses, which allows better conservation of energy. So for example, if you are turning on AC in a glass building, then probably that energy does not escape the building. So instead of using your air conditioner for 8 hours on full throttle, you might have to use your air conditioner for only 6 hours. So that is how these buildings become energy efficient. And companies like Borocell Renewables manufacture those glasses. These glasses also find application in automotive. They also find application in solar panels, and bunch of other industrial applications are there. So that is the primary nature of this company. And if you take a look at the glass industry, just to develop a very quick understanding and set the context right, you will see that in 2019, this industry was roughly at $116 billion. And by 2024, it will become a $154 billion industry, and it will display a CAGR or compounded annual growth rate of roughly 6.5%. There are 3 very specific applications of flat glass. One is in the construction industry, as we spoke about the energy efficient buildings, very big usage there. Second, in solar panel design and fabrication. Third and finally, automobile manufacturers also use flat glasses. So what makes this company, Borocell Renewables Limited, so special is the fact that it is the only solar glass manufacturer in India, and it is the largest non-Chinese manufacturer of solar glasses in the world. So that is what seems like the competitive moat of this business. Now, before jumping into the stock analysis and talking about the financials and other moat of the company, let us take a very quick overview of the industry growth. So if you look at the prospects of energy growth all across the world, what is happening is that there is a lot of supply chain crisis all across Europe, all across the US. In the Europe, energy has become one of the talking points. And if you ask yourself, what is this Russia-Europe crisis is about? It is about energy crisis. That is where the majority of the problem is emanating from. That Russia does not want to supply its oil to European countries, and it is squeezing the juice out of European countries. Similarly, US and European countries are squeezing the juice out of Russia by putting sanctions on it. So it's a war of controlling energy. So as a result, what has happened is there has been an energy squeeze, and you might be seeing power shortages in India also. There has been coal crisis, electricity crisis. Same kind of dynamics and hoopla is playing out in Europe also, Russia also, US also. So the world is going through an energy crisis as of now. So as a result, solar energy becomes very, very important. In fact, any form of energy becomes important, be it solar, be it nuclear, be it thermal. And the world, as it reels through this crisis, they are going to develop their ecosystems and supply chains, focusing on different layers of energy. And therefore, solar energy and solar glass manufacturing becomes a very important concept to implement across major economies. So you can clearly see in the article, and I've highlighted the important point, that we expect a significant jump in the demand for solar glass in Europe in view of the enhanced focus by governments to reduce dependence on Russia gas and Chinese solar components. What is the situation in India? So let me show a couple of snippets regarding India. And again, I have highlighted important points that the country has seen solar installation rise to over 12.4 gigawatts in the year financial year 2022, which is almost 80% higher than the previous year. Now, this is a very, very fairly big jump in percentage terms. So this is huge. Second key point that you must remember is that our imports are going to drop, and that would mean that the demand for glass is going to be substantially higher than before. So why is the import of solar or flat glass going to drop in India? The reason there is fairly simple, that right now the imports are high because right now there is only one manufacturer of solar glass in India. So as a result, we have to import a lot of stuff from outside India. But as countries are developing their own local supply chains and local capabilities to develop and manufacture stuff, including solar glasses, this import dependence is going to come down. Now tell me in the comment box that which company is going to benefit from such a move, that if India focuses and relies heavily on self-dependence on manufacturing of flat/solar glass, then who is going to benefit? Your answer would be Adani's, and you might not be incorrect. Please continue watching the video and I will explain you why. But in the short term, even Borosil is going to benefit. Now let me help you understand more about the stock by doing a fundamental analysis, and I will try to show you picture across both the spectrums. I will talk about the pros of the company also and cons regarding the company also, so that you can make a more informed decision and choice. This is not an investment advice, so please do your own due diligence. But yes, I'm going to reveal my answer whether I'm going to take positions in it or not. So let us start with the advantages or pros of the company first. Why is it that this company is likely to survive and thrive and generate good returns, like 2x stock price in the next 4 years? So first and foremost reason is that the industry in which it operates, it is very difficult to aggregate manufacturing in it. The type of manufacturing units that need to be built, they are very capital intensive. There is a long lead time in terms of building the specifications of the factory, importing material, creating infrastructure and architecture to manufacture this solar or flat glass. So this is what their state of the art manufacturing facility looks like. It looks very, very big, like some kind of nuclear power plant, etc. But it is a very complicated machinery. We don't need to understand the engineering side of it, but we need to assume the fact that it is very difficult to create such a facility. A connected point, as I explained earlier in the video, is that right now Borosil India Limited is the only company in India as of now that has that manufacturing capability and capacity. Are other players entering into this space? The answer is yes, and I will talk about which these players are. But as of now, Borosil Renewable Limited has fairly big capacity. So this brings us to second point, that because it owns a lot of capacity in terms of manufacturing ability, its operating profit margins are increasing. For example, if you take a look at the operating profit margin growth over the last 10 years, operating profit margin simply means that, for example, it takes them 50 rupees to manufacture something and they are able to sell it off at 80 rupees. Then what is the profit margin? It is 30 rupees. Now in percentage terms, you can calculate. So that is OPM, or operating profit margin. So this OPM or operating profit margin has been going up, up and up. Why is that happening? Because the manufacturing capabilities are getting enhanced. With every new year, they are able to add more manufacturing capacity, and there is a concept in economics called as economies of scale. So for example, imagine this, that if I have an ice cream factory and I am only able to make 100 ice creams a day, then probably I am manufacturing it at a very small scale. I have to still put one manager and 2 people selling that ice cream, whatnot. And suddenly, if I am able to expand that capacity to 500 units of ice cream, then I still have to hire probably one manager only. So what ends up happening is that my OPM or operating profit margin margin goes up. So this is a fairly big play, and this becomes like a comparative advantage or a comparative moat for a company that controls manufacturing. So this is a very, very important point. Please keep this in mind. Now, third key point, they are further expanding this existing capacity. For example, if I talk about the expansions plan, what they are doing is that they are installing something called as SG3, which is a new manufacturing facility. We again don't need to get into the engineering side of things. It will cost them roughly 200 crores of investment. This is fairly big investment, and this is for the first part of financing. So probably creating this manufacturing facility will take even more money. So the bottom line is that the company is already committed to expanding its manufacturing capability. They have already secured financing, and they are moving ahead with the plans of increasing their capacity. So what will happen to operating profit margin in the future? It is likely to increase. Now with this SG3 expansion, it will take Borosil Renewables domestic capacity to 1000 metric tons per day by September of 2022, with the 500 tons per day enhanced capacity from its European operations and proposed SG4 expansion also. So they are doing SG3 as of now, and they will move to SG4 also. So that is additional layer of capacity that they are building. They have also acquired a company in Europe. Now why is that? And this brings to the another moat of the company or another winning point for the company. If you study where this company right now exports, so you will see that 77% of their business comes from India and only 24% comes from outside India. So they want to export abroad, and so as a result, they have gone and acquired a company called as Interflow Group. Now, this is a Europe-based manufacturing firm, and what they do is that they have a production capacity of 300 metric tons per day in solar photovoltaic, solar thermal, and greenhouse glasses. Important point to note is that Borosil is trying to compete against the Chinese manufacturers, and therefore it has gone and tried to bolster up. So the word of the day today is bolster. Let me know what does that mean. So Borosil is trying to bolster its performance in Europe. Now, why is that? Here is a very interesting paragraph that I had to dig up. So right now, Europe has anti-dumping duty against China. So they are not Chinese fan for a wide variety of reasons, and for any other country they do not have anti-dumping duty. Now this is a fairly double-edged sword play. These kind of litigations can go either side. They can be done away with fairly quickly, or they can be continued. So this can become a winning advantage for the firm, or it could not result in anything. But the point is that Borosil is at least making an effort to compete against the Chinese. So these are some of the key advantages, and let us wrap up the conversation about the moat of the company by looking at the financials. If you take a look at the sales, you will see that sales have been growing at a consistent basis, which is a very good sign. If you take a look at the profit growth, so you can see that the 10-year CAGR on profit growth has been quite impressive. 3 years has been quite impressive. 5 years has been quite impressive. So overall, this is a good company from both profit and revenues viewpoint. There is no major problem there. Does that mean that you should sell your house and invest everything in Borosil? The answer is no. You must listen to the negative side of the story also. So there are 5 specific negative points that you must remember. So first and foremost, in Europe, they are running a program called as Solar Accelerator Program, where local module manufacturing and local solar cell manufacturing are being promoted. So there are multiple Modi Jis in the world. There is not only just our Modi Ji. There are many other Modi Jis all across the nations that are also trying to empower their local communities. So by the way, this is not a criticism of Modi Ji, so please don't start a ruckus in the comment section. I'm saying good things, okay? So this is point number 1, that there are many other leaders that are trying to support their own country. They are trying to bolster up the local manufacturing capabilities, and Europe as a region is trying to do the same. So in case the world moves towards a model where they are manufacturing or giving preference to their local supply chains, then it will become a problem for a company like Borosil that is betting big on their international expansion. So this is point number 1. Point number 2, that given the nature of the industry, it requires a series of different input material, and it requires big shipping containers and movement of logistic very seamlessly. So FOB prices. So here is a paragraph for you. Please read it with me. So FOB prices are actually going to go up by roughly 14 to 15% already in the current period. So FOB simply means that who bears the breakage cost of the product. For example, if materials are being transported from, let's say, Malaysia to India, and if those glasses get broken, then who picks up the cost? So is it going to be buyer or the seller? So in this industry, the buyer ends up picking most of the cost. So buyer here means Borosil. So this is one part of the equation. The second part of the equation is that the supply chain disruption still exists, and it is impacting all the markets in the world, including India. So therefore, it is still a big issue. Third key point, that there are capacity expansion projects at play. For example, they said, we will build SG4. We have secured funding for SG3. We are undertaking capacity expansion, and we will utilize this increased capacity and sell more stuff in Europe. So there are a lot of ifs and buts here. Many of these steps might not play out, and right now, the way the stock is behaving, it looks like, and this is what the experts say, that all these good things have been factored into the stock price. So factoring into the stock price means that whenever you're looking at any stock, for example, let's imagine that ITC is trading at 300 rupees and it has announced 500 plans that we are going to do this also, we are going to launch like 50 more products also, this, that market has factored in all these good things into that 300 rupee stock price. Now, if for some reason any of these plan fails, then the stock will start getting discounted. So something very similar might play out. So here is a very quick paragraph that in India for SG4, we have still not firmed up our financing plan. So this looks very if and but like. So yeah, all these things have been factored into the price. So we don't know whether this will actually play out or not. Now comes the fourth point and one of the most important points, which is a major con for this company, which is around the branding power of the company. So recently the management of the company was asked a question that, okay, there is 13-14% price increase that we are seeing currently due to inflation. So has this cost been covered? So the answer was not fully. So what does this mean? For example, if you consider companies like Asian Paints, if you consider like Nestle, if you consider like HUL, they have been increasing their prices very easily. But this company as of now is not able to pass on its cost to its customer. Why is that? Because it is working in a B2B segment. For example, people like you and me are not buying like solar panels in bulk, right? If someone has to buy solar panels in bulk, or if some big construction company has to build a huge building, energy efficient building, then they will buy like flat glasses in bulk. We are not doing it, right? So these are B2B contracts and it is very difficult to pass on the prices on these B2B players. So this is a big con in terms of buying this company as of now. Now comes the fifth and final point, which is about external competition. And I'm smiling here because when you read it with me, you will also smile. Okay, so here is the point that Adani is well on its way to setting up its production facilities and they expect to come into production by the end of this year. Okay, so now we should just cut the stock analysis discussion and we should simply go and invest in Adani stocks. Okay, so tell me in the comment box, is there an industry left where Adanis are not there? I'm having a hard time thinking about it and my voice is trembling as I'm stating these statements. So I'll move on from this topic. But I hope you're smart enough to realize that, okay, this is going to create a lot of pressure on this company. Going forward, we don't even need to get into the analysis of whatever Adani launches, right? So that is the bottom line. So now comes the final question that should you be investing in it from a long-term perspective or a short-term perspective or a medium perspective, or should you even invest? Okay, so a few basic points. So from a short term, I don't think that it makes a lot of sense to invest in this stock, fundamentally speaking. The reason there is very simple, that right now there are a lot of ifs and buts associated with this particular stock as of now. The stock is giving an uptrend. So the risk reward equation for this stock is fairly high. Now comes segment 2, that should we invest in this company in the midterm? So the answer here is maybe, because the company is good fundamentally. It has existing capacity. It has very clear goals, plans, expansion strategies, good management, everything looks clean. But the problem is that if their European contract does not play out as per expectation, then this stock can fall quite massively. So there is risk involved with it. But there are very good technical patterns that are getting formed in the midterm. So for example, you can see that this is a very clear reverse head and shoulder pattern, and this gives us a breakout target of approximately 1000. So this is a good target and good gains to be made on this stock from a midterm perspective. But the problem is that in order for this breakout to play out, it needs to be supported by the market. And this is where macroeconomic analysis comes into the picture, that right now it doesn't look like that the world is moving towards integrated trade. Every country is trying to save their own behind. For the lack of a better word, I have to use the word behind, but I hope you get my meaning, right? So every country is trying to save its own behind. They are not in mood to play together as of now. And unfortunately, we are moving towards a world where recession is almost given. It has already started. I had already made a video on this topic. You can go and watch it, and I will make an updated video on that, which will be again very important. So please watch it. And these type of companies suffer a lot, especially when they are betting on international trade. So every country is trying to save its behind. And I think that majority of the export oriented players are going to suffer in this environment. From a long-term perspective, a lot depends on how this company competes with Adani and the likes. So that remains to be seen. But yeah, I would not bet against Adani's. So to cut the long story short, that from a short-term to long-term play, it looks dicey unless its European operation kicks off. If that kicks off, then yes, this stock is again going to double in the next 3 to 4 years. That is definitely going to happen. But if the international market scenario does not play out well for this firm, then I don't think that this will double again. But this is my analysis, my hypothesis. I can be wrong. So please narrate your hypothesis in the comment box. I would love to read your comments and together we can make a call whether to invest in this company or not. As of now, I'm just waiting and watching. I'm not taking any action, but I'm definitely adding this stock to my watch list. Thank you so much for watching this video and let me know which of the one of the 3 stocks you would want me to make a video on. Thank you so much and I will see you the next time.